Join me as I dive into the world of index fund investing and challenge myself to figure out if it's the right choice for me. Index fund investing has been gaining popularity among investors in recent years, and for good reason. It's an investment strategy that's designed to provide broad diversification, and Vanguard founder John Bogle is often credited with popularizing the concept. Many people are intimidated by investing because they think it requires a deep understanding of the stock market or the ability to pick individual winners. But the truth is, most people aren't equipped to do that, and even the professionals often struggle to beat the market. That's where index funds come in. They allow you to invest in a little piece of the entire market, rather than trying to pick individual stocks. But despite their growing popularity, there is still a lot of misconceptions out there about index funds. One common misconception is that index funds are only for beginners or for those who don't know much about investing. But the truth is, index funds can be a great choice for anyone, regardless of their investment knowledge or experience. Another misconception is that index funds are somehow less sophisticated than other investment strategies, but that couldn't be further from the truth. Index funds often outperform actively managed funds, and they're typically a lot cheaper too. Some investors are also worried that index funds are too passive, that they're not actively working for them. But the reality is, most actively managed funds don't beat the market in the long run anyway. And with index funds, you're not paying a team of managers to try to pick winners, you're simply investing in the market as a whole. And then there's the criticism that index funds are only good for boring, conservative investors who don't want to take any risks. But the truth is, index funds can be used to invest in a wide range of asset classes and geographic regions, so you can tailor your investment strategy to your own risk tolerance and goals. There are also challenges that investors face when choosing an investment strategy, and one of the biggest is the fear of missing out, or FOMO. We've all seen those hot stock tips or trendy investment ideas that promise huge returns, and it can be tempting to jump on the bandwagon. But the reality is, most of those ideas don't pan out in the long run, and you're often left with a portfolio that's full of individual stocks that are down 50% or more. With index funds, you're not trying to time the market or pick individual winners, you're simply investing in the market as a whole. Over the years, I've heard from many investors who are frustrated with the high fees and poor performance of their actively managed funds. They're tired of feeling like they're not in control of their investments, and they're looking for a simpler, more effective way to invest. That's where index funds come in. They offer a low-cost, diversified investment strategy that's easy to understand and easy to implement. One of the biggest advantages of index funds is their low fees. Actively managed funds often have much higher fees, which can eat into your returns over time. With index funds, you're not paying a team of managers to try to pick winners, you're simply investing in the market as a whole. And because index funds are passive, they don't have the same level of trading activity, which means you're not paying as much in taxes either. Index funds also offer incredible diversification. When you invest in an index fund, you're investing in hundreds or even thousands of individual stocks, which means you're spreading out your risk and increasing your potential for long-term returns. One case study that really stands out to me is that of Warren Buffett's Vanguard 500 Index Fund. In 2007, Buffett made a $1 million bet with a hedge fund manager that the Vanguard 500 Index Fund would outperform a basket of hedge funds over a 10-year period. 10 years later, the index fund had returned 7.1%, while the hedge funds had returned just 2.2%. That's the power of index fund investing. Another example is that of my own investing journey. I started investing in index funds about 5 years ago, and since then, my portfolio has grown steadily, despite the ups and downs of the market. Of course, there are also potential drawbacks to index fund investing. One concern is that you're essentially buying the entire market, which means you're also buying the losers. And because index funds are passive, they won't try to adjust their holdings to reflect changes in the market. But in my opinion, the advantages of index funds far outweigh the potential drawbacks. So, who is index fund investing right for? In my opinion, it's a great choice for anyone who wants a simple, effective investment strategy that's easy to understand and easy to implement. Whether you're a beginner or an experienced investor, index funds offer a low-cost, diversified way to invest in the market as a whole. Thanks for watching, and I'd love to hear from you in the comments section below. Do you invest in index funds, or are you considering it? Let me know your thoughts, and be sure to check out my next video on investment strategies. Thanks for watching, and I'll see you in the next video.